What are support and resistance and how can we actually use them to go ahead and trade? I'll show you in this video, including how to actually draw them on the chart and then how to use that data to go ahead and implement our own trading strategy. So the first thing is, how do we actually draw support and resistance on the chart? Well, what we can do is get the words support and resistance out of our mind initially and replace that with key price level. Because what we're really looking for are key price levels where trade is rejected away from. So what I mean by that is we have a direction of travel. Well, at what point is that direction rejected and you move in the opposite direction? If you're moving down, right? So which point, which price level is that, trend rejected and you reverse? That's the key price level because these on the right-hand side are the prices that we're trading at. So what we're going to do here is try and find key rejection levels with massive swings that are outliers. So let me explain that right now. So I'm on the Bitcoin chart right here, and we're going to put these key price levels on, just using TradingView. Highly recommended. It's a free platform, so definitely use it to do this yourself. I'll link them below as well. You can check it out. So key price level. We have a direction of travel. When is that going to be rejected? It gets rejected right here. So that is a key price level. We can have that as something we might want to look at. The price moves down, but it gets rejected again and then moves in the opposite direction, right? So that's a key rejection level. It has a massive swing and it's an outlier price. On the move upwards, we have another rejection right here, which is very clear, right? Now you can see we have this move up, this move down, up, down, right? So when we're looking at higher time frames and we're looking back into the past, what we want to do is say, where is that key level, right? Where is the real resistance? It's an outlier price level that we want. So we don't want any of these because these are not outliers. We're looking at this, right? That is the outlier because that's where the actual price gets to. It's the outlier level. It's none of this kind of trade and choppy trade in here. It's the outlier price level. So that's one right here we have. So we'll just circle that. We reject down this key price level. It's the outlier. You get a massive swing away from it, and you can see the price rejects away from. So anywhere you get a rejection. What about this one? You see we get rejections here as well. Now, these are support and resistance levels, but they are less important because they're not outliers. This trade is within this price action. And so this is a level, but it's not very, very key. So this depends on where the actual price is now as to if we really want to see this as something we want to trade. But initially, we just want to get the very large rejection levels. So we have a rejection level here. We have what seemingly is a rejection level here, but again, it's within the trade. So we'll have that as maybe, a kind of second order support and resistance level. Then we have a massive key level here, right? And this is all within trade. So now what we want to do is really look back to see where can we draw support and resistance in these key levels. From here, we want to make these key price levels relevant to what we actually want to do now. The way we do that is to see what price are we trading at now. You can see currently the price of Bitcoin is around 37,000. So what we want to do is look backwards to those key price levels to see if any of those are relevant to us right now. These two are very clearly massive key price levels, but they're so far away from our current price that they're completely irrelevant for what we want to do. So we can just get rid of those because for right now, at least, they just aren't going to help us. This one as well, it's obviously a very key level. There was a huge rejection from here and a massive swing to the upside. But again, it's around 50 or 60% away from the current price. And so it's not really relevant for us. And so we're going to reject this one as well. Now what we want to do is look back and say, are any key price levels relevant to where we're trading right now? And there are many around here. So what we can do is say, how do we implement these on the chart? Well, it seems like this entire area is one massive level. So instead of drawing a line, what we can do is actually just draw an area with a rectangle box and say, this price level seems to be incredibly important, so we can draw this on. Now what we can do is just get rid of these, which I drew on, and we can try and make the support resistance levels a little bit more accurate when we want to trade that. So let's look in and really get this accurate. You can see these rejections. you can see on the weekly chart, sorry, you see these very, very key areas of rejections. They aren't exactly the same price level, but it gives us an area to trade. So I would say, you know, somewhere around here, and then on the downside, you're looking at somewhere around here. Now, I personally like to put these levels on the candlesticks, not on the wick itself, but on the actual candle body, because that's where trade ended during that period. And so we can have that. So now essentially what we have is on these two levels, actually a support at the bottom and resistance at the top, an area of trade in between. And that's exactly what we're doing. Now, if we come down to more recent price action, what you can actually say is, you can see that this price level here was essentially resistance. Well, we're through that now. So this is going to be an area of support. Okay, this area around 32,000. Now, we are trading here with resistance around 39,500, call it 40,000. So 32,000 to the downside, 40,000 to the upside. This is our trading range. From here, we can tidy up our drawings to give us actual levels to trade. So what we can do is now use the horizontal ray and give ourselves a resistance level or a support level. I'm going to give a support level with the ray, which is around here towards the bottom of this range. And what I'm going to do is actually give us a resistance level around here. You can see I've narrowed this in. Why have I narrowed this in? You can just see a lot of trade around this level previously, right? So it's very clear to see a lot of rejections here and rejections here and rejections here. So this is clearly somewhere where we want to trade, and we're trading into that. We now have support and resistance. We have a support level at 32, and we have resistance coming in again at this price level. You can see the wicks, so we're getting resistance here, right? So that's very clear. So we have a much clearer avenue here to actually trade. Let's just progress this. Now we have support and resistance. And now what we want to do is see, where do we want to take positions? Now we can go ahead and use these key price levels to trade. Which direction should we trade in, and how should we trade the levels? Well, very simply, we have to understand where the trend is first. So if the trend is to the downside, what you want to be looking is trying to essentially sell support levels, because during downtrends, support levels may get tested and actually break to the downside. So during a downtrend, as you can see here, we have a downtrend. This key price level was tested, broke through, tried to recover, and you can potentially take short positions around this because this is now a resistance level. It's a resistance level where price rejects away from. During uptrends, what you want to be doing is taking long positions where you're testing. So as you come into key price levels, you can see people are selling this off, but what you want to be doing is buying these. You want to be buying these levels because eventually that is going to be broken, right? So this is more longer term. We're looking at the 1 week chart. We're looking at 6, 12, 18-month trades. But during uptrends, you want to be buying weakness from these rejections. So when you get rejection, buy this weakness. When you get rejection, buy this weakness. If we get a rejection here, buy any weakness here. Because what we're looking for is an uptrend. So we're looking to buy weakness. During downtrends, we're looking for these levels to break and actually sell that weakness, right? So that is what a trader would be doing over a swing trade. So you can very easily just say, I'm going to dollar cost average or put in, 5, 10, 12 trades around these levels in anticipation for this uptrend to continue and break through these levels. Any weakness from this, that is actually something that long traders are going to be buying during these uptrends. So take the opposite position of the market and know that these price levels will break. And so trading under here is something that you want to be doing during uptrends. So we see that here as well, where we're getting a slight rejection. Any weakness here, long trader over the next 12 months would be buying weakness here because we're looking to test these levels once again. Another example on the Ethereum chart, let's get the trend in place first and see what we want to do with that as a long-term trader. There are opportunities with support and resistance depending on how you want to trade. I'll show you both of those now. You can see the Ethereum chart right here. We were in a downtrend and we met a key price level. You can see that here. So a key price level, key price level. What happens in downtrends is that those key price levels get broken. We broke down and we met another key price level here that we now have on the chart. So as we move up into this, you can see we got rejection. So short-term traders may trade that rejection to the downside, take a short position here at this rejection, and then try to take a short position and benefit from the price coming somewhere down to this support level again. That is a perfectly fine trade and can be done over the short term. This is a week chart, so this is probably a couple of months trade, and a nice one at that. You would have shorted 2,000 and bought back at 1,1300, a good trade. Then we move back up into this resistance again. You can see we get rejected again. So potentially people that trade on the short side will try and short this resistance because of rejection and, try and trade it down to the, lower support line again. However, longer term investors here or swing traders, maybe a 12 to 18 month trade, can see what's happening here is that the trend has changed. So we have a low, we have a higher low, and we have a higher low. Let's put this in. We can actually just draw a trend line here. It's kind of a little bit wonky because this doesn't really work out, but I just want to show you this trend, right? So we have a low, a higher low, and a higher low. This is clearly an uptrend. We now have an uptrend which is testing resistance once, twice, and now a third time. The price action is getting ever tighter, as you can see here. So what we're looking at is potentially an uptrend with a breakout of resistance. It is absolute suicide for a trader to short this now, because each of the rejections away has come to a higher price. This is a clear uptrend in this chart. Shorting this is massive suicide. Your risk reward now is to take profits if it moves back down to this trend line. So this is clearly an uptrend. And so what we're looking for is potential breakouts. So any weakness from this, in my opinion, would actually be bought because it looks like both on the Bitcoin and Ethereum charts right now that these are potential breakouts. Now, of course, you can reject again, but longer term, it seems like we're in an uptrend. So what we do now is potentially buy weakness anywhere around here, looking for a potential breakout. And now what we do is look back to the chart previously and say, are there any further key price levels that the price may get to? And it seems like potentially we have one, around about here. So let's draw that on. Round about here, you can see there's a kind of some key price levels again, right? So you have some choppy trade here, rejection here, and some rejections here. So for me, it depends who you are. If you trade short and you trade rejections, or you try and trade breakthroughs. But it's key to look at the trend on both of these. Where is the trend and how long do you want to be in the trade? Do you trade rejections, or are you trading the trend itself and looking to break through key price levels? You can do that on every single chart here. And Bitcoin and Ethereum are both testing that seemingly in uptrends. So going short isn't great in an uptrend because you're going against the whole weight of the market. If you trade crypto, I'll leave a deposit and trading bonus up to $30,000 to Bybit, which is this platform that I use right here down in the description below. I'm James, this is MoneyZG. Cheers for watching, and I'll see you in the next one.